Lender's mortgage insurance, or otherwise known as LMI. So what is lender's mortgage insurance? It's a fee that's been charged by the banks, but it's for the insurer. So the insurer is a company that insures the banks. So when a bank lends money, to people for when they're purchasing investment properties or vehicles or whatever the money might be used for, there's going to be a fee involved depending on the size of the deposit that they're putting down. Now, this insurance or this LMI is covering the banks. It's not covering yourself. So it's a fee that they charge why? Because of risk. Depending on your risk application, depending on what you're purchasing, and depending on your profile, they're going to charge this fee. Now, if you have less than a 20% deposit, this is when LMI is going to be charged. Now, if you have a 10% deposit, the fee is going to be a lot more expensive compared to if you have a 15% deposit. So the lower your deposit, the more the fee is going to be charged. And this fee is going to get charged once you settle on the property. The fees will be charged, and these fees aren't refundable. So you're not going to get your money back. Even when you start paying down your home loan and you've paid over 20% of that home loan, you're not going to get reimbursed with the LMI fees that you did pay, because it's going straight to the insurer, which the banks use an insurance company to insure them when they're lending out money. So how is it calculated? So every bank's different. Every lender is very different, so they all got different policies. But 9 times out of 10, they go by this criteria. They use, the size of the loan. So depending on the size of the loan, the higher the value of the loan, the more the LMI is going to be charged. So it goes off percent formulas. Now, every bank got different percent formulas, so it can vary. Okay, your deposit amount. Like I said before, if you've got a 10% deposit, they calculate an LMI fee off the 10% deposit. If you've got a 15% deposit, they calculate that off a 15% deposit. So depending on the size of your deposit. Property use. Is it a family home or is it an investment property? The fees are going to be a lot different. So that's something to take into consideration and have a look what certain lenders' policies are for family homes or investment properties. Some might be cheaper, some might be more expensive. Employment stability. So depending on your employment, if you're someone that's a lawyer, a doctor, accountant, or someone that works in the bank, they get discounts and cheaper, or they get discounts, or they don't have to pay LMI, and this is something that helps them avoid this hurdle. So this is a great asset to have. And it all comes down to the insurer. So depending on the banks and what insurance company they're using, some insurance companies might be a little bit more expensive than the other. So that's something to take in consideration as well. Now, how do you avoid LMI? Something that, it's asked a lot. Now, like I said before, coming down to your employment profession, if you're someone they classify as a low risk, so if you're a doctor, like I said, a lawyer, an accountant, someone that works at the bank, depending as well, you don't have to pay LMI. Now, some other professions, depending on nurses, they can get discounts as well on reducing their LMI fees, so that helps them as well. So it all comes down to your profession. Now, shopping around for different lenders, they have different LMI fees as well. Not everyone has the same LMI fees, so that's something to take into consideration. Doing your homework, having a look, calling up or speaking to your broker, and if you've got a trusted broker, they'll do their research and they'll know which banks have cheaper LMI fees. Paying a higher deposit. So if you pay a 20% deposit, you don't have to pay LMI. Anything under a 20% deposit, you're going to have to pay LMI. So if you come up with a deposit, that's going to help you avoid LMI. Now, if you don't have the extra funds, getting a gift, from your parents or your loved ones, asking for that extra deposit so you can avoid paying LMI, and they can possibly, use a word of agreement or word of mouth. Maybe you pay them back X amount of time, or it might be a gift from your family. But that's a way to get around it. So LMI, remember, it's not something that's covering you for your home loan. It's covering the banks, which might sound unfair, but that's the way the cookie crumbles. Now, if you want to get insurance on your mortgage, just because you want to make sure that if something does happen to you, you can be covered, you can get mortgage insurance for yourself. So don't think this LMI is covering you. It's actually covering the banks. So if you got something from this video, please like, subscribe, share this video with other people. It helps them, I guess, understand the LMI situation and if it's worth paying or not for their personal situation. So thank you for watching this video.